Hey everyone, good afternoon. How's everybody doing? Happy Thursday. Hope everybody's having a good day today. A little bit of a slow day today. I think there was a lot to do in the morning, but I had a pretty out of the ordinary event today on a swing trade, which was the Etsy, and I also made a mistake on the Oracle today on a day trade, which really kind of spurred me to do a quick video on managing a trade, specifically managing with the intention of capturing the home run or the large move, right? The Oracle was a really nice trade this morning, which I did not capture the large move. I only captured a short move. And the Etsy was a swing trade, which was a pretty large gap up today where I was able to capture a large move, right? So what I really kind of want to go over is, I think we kind of hear this golden principle a lot in trading, which is cut your losses short and let your profits run, which is really a core principle in my trading, and I kind of want to dive into how I use managing a position to let my profits run. Okay, so that's kind of going to be the focus here, and we'll talk about two examples. And one is what happens if you do let your profits run, and the other one is if you don't let them run and the price that you pay. Okay, so let's start with the Etsy here. The Etsy was a swing trade, and I mentioned this when I was on the mic here. All right, and it was a igniting bar here, right? If we scroll back on the daily chart, igniting bar on a gap up. We based sideways. We had this small gap down, which ended up getting bought. Then we had this nice base here, and then we had a breakout day. Okay, Etsy's been in a uptrend on the larger time frames as well on the weekly and monthly chart. So I was looking to play this long, and I like the bullishness that this had after we got this gap up. Okay. So the first thing that you'll notice is that the blue markers where I went long, and the pink is where I went short or covered my long position. All right. So the first thing that you'll notice is that there's multiple exits here. All right, and this really kind of is really useful for me because one is I typically use 3 exits. All right, and you can see here that there's 4. If a trade really kind of continues in my favor, I will begin to continue to leg out of a position. All right, so the reason why I use 3 exits is because each time I exit a position, at least for the first 3 exits, I am using a different strategy to solve the imbalance between that my R to R is creating. All right, so let's kind of break that down a little bit. We talked about a couple of videos ago. We talked about the things that there's 6 parts that make up an edge in the market. All right, those are the 6 things that I use are the batting average, how often we're right versus how often we're wrong. The second thing is the R to R, how much we make on our losing trades versus how much we make on our winning trades and how much we lose on our losing trades. Right, so we want to make more on the winners and lose less on the losers. The third part is how much it costs to trade. We have the account size, what our account size is. We have how often the opportunity presents itself. And then lastly, which is probably the most important, is how much size we have in the position, right? How much we risk. Okay? So what happens is if we look at the entry and exit here, all right, what happens is, let's say, just for example, right, let's say we enter a stock here, we're going to exit the stock here, and if it goes against us, we're playing long, right, and the stock moves up, it comes back down, right, and we get a move higher here, right, and we play long, all right, so we're playing long here, and we're exiting if the stock goes below this point, all right, so let's say the stock moves up we're going to risk $200 playing long here, and let's say the stock moves up 2 risk units, okay? So now the stock is up here. All right, here's our exit. Here is our exit if it moves against us, and the stock has moved up 2 risk units. Well, we're no longer risking $200. We're risking $600. Okay, so our R to R changes, especially if our target is up here, then our R to R has completely shifted. Okay, so now we're risking this much, right, which is $600 to capture roughly $200. All right, does that make sense? And I know this isn't the best drawing, but when a stock moves in our favor, the R to R changes. All right, so when the R to R changes, now I like to have at least a 2-to-1 R to R on day trades, and even more on swing trades. And so when the R to R becomes more of a 1-to-3, right, that's an imbalance in my edge. And so how I deal with that imbalance is I reduce my position size. Okay, so all 6 of these parts work together. And so when my R to R becomes out of balance when I'm in a position, I use my position size to bring a little bit more equilibrium back into my edge. All right? So let's talk about the exits here. So the first exit, and this is just management that I use. It's after a lot of studying, of tracking all different styles of management, all different types of management. This is what I came up with that works most effective right now for me. All right, in this market environment. And what that is the first exit for me is to help with my batting average. All right, so when a stock gets roughly 2 Rs in my favor, 1.5 to 2 Rs, what I look to do is I look to exit half of my position, and what that does is it ensures, all else equal, it ensures a profitable trade. All right, so if a stock is over 1 risk unit and I exit half of my position, that ensures a profitable trade. Now, I like to have the stock up roughly 1.5 to 2 Rs, exit half of my position, and so what that does is it boosts my batting average. All right, which is probably one of the least important things, but it does boost my batting average, which is definitely a part of your edge. Okay, so that's what happened with the Etsy. Okay, we came up here. Now, I will say that I am definitely a technical analysis trader, so if there is support or resistance on the chart, that is going to somewhat override whether it's exactly 1.5 or 2 Rs. All right, so I'm looking for support and resistance. Now, the Etsy, I believe, was at all-time highs, I believe. Let me pull up a monthly chart here because I just want to make sure. And no, it wasn't quite at all-time highs, but there was a void until all-time highs, which was 35.71, right? Which was right here, roughly. Okay, so we did have some void here, so there wasn't any clear support and resistance. So what I did was, once this position was up roughly about an hour and a half here, if I remember correctly, I think there was something going on with the overall market as well. But once this was up roughly about an hour and a half, I ended up exiting half, and that helped my batting average. It ensured that this was going to be a profitable trade, right? So the second exit that I had here, I used to reduce my exposure and to help with the winning trade being larger than the losing trade. All right, so it makes, for lack of a better term, it makes the winning trade a nicer winning trade, right? It makes it a nice winning trade, and I look to take a quarter of the position at that point. All right, so this was up maybe 3 Rs here at this point, and we got this wide range bar, this move up, and I took a quarter of the position here. All right, so now I have a positive batting average here. Which is helping in my edge, and I also have a winning trade that is a decent sized winner, right? It's more than 1 R, because at the first exit it was only a little bit over half an R, right? And so after, which isn't more than my losers because I'm risking 1R. And then on the second exit, this ensures that this winning trade is going to be over 1R, right? Which is going to be more than my, if I took a full stop on it. All right? Okay. Now, after that, my main goal is to manage the position for the event where it's more of a really large trade. All right, a really high R to R trade, where I'm going to manage this until the trend is over. Now, swing trading, we definitely have an advantage swing trading because we don't have a time restraint. Day trades, I personally don't hold day trades into swing trades because it deteriorates my edge personally for the strategies that I employ. But the swing trading, we don't have a time restraint, so we can hold this for as long as it keeps going in the direction that I'm looking for. Right, and so my management on a swing trade is I manage daily significant pivots. It's what I found works best for me and also keeps me in the trade for as long as possible. Right, so once we moved up here, the stop was moved up to here, then the stop was moved up to here. Right, this was a close stop out. I remember this, and it was a quick drop here, and it was a close stop out. Right, and then we got this gap up. Okay, and I don't even know how many percent this is. I don't have percent change on my platform. I can probably look it up, but I don't know how many percent it was. Maybe 15 or something, right? And then we got this gap up here, right? Which I took I was on the mic here when I took this. I took an eighth of the position here because we got this large run up, and then on this gap up, I closed the position out. Okay, so I probably should have done this before I came on and did the video, but we can do it quickly here. So the stop size was roughly 60 cents. Is that correct? No, not 60 cents. $1.60, $1.50, right around there, $1.50. Right, so really high R to R trade. Now, like I said in the beginning, this is an abnormal event, right? To get this gap in my favor like this, right? But gaps in your favor, what I found is if you're playing in the direction of the trend and you're on the path of least resistance, you're going to get the gap in your favor much more likely than you get a gap against you, right? Obviously, anything can happen, but the message that I really wanted to bring here is through management, one, my first exit is to help my batting average. Second exit is to help my R to R, make my winning trade loser. And then I'm going to stay in this position as long as the trend continues, right? And for me, if I do that, this is the kind of home run you get, right? They don't all work like this, right? They stop out the last position, okay? The runner position is what I call it. The runner position doesn't always work. We had the AET yesterday I called in the room, which was a day trade. And let me put my markers on here to help us. Yeah, AET was a long here, 1 minute buy setup. I think I actually took a... Right, here was the long call, right, with the targets, and 190 was the big target, right, which was up here. 190 was the big target. We did the exact same thing in this trade, right? Let me use a 2-minute time frame. And it was a 1 minute buy setup, right? 1 minute buy setup here, the long. We got right up to target 1. We lightened the load by 50%, which made it a winning trade. We took another quarter, which made it a decent-sized winner. And then, unfortunately, the remaining position didn't go anywhere, right? We ended up killing the rest of it here later in the day. So it didn't get to the large target, all right? Still a winning trade. Still a decent winner, and was still profitable, but we put ourselves in a position to take advantage for the winning trade. So they don't all work as nicely as the Etsy did, right? But that was a kind of a anomaly that happened today, which kind of spurred me to come on and talk about this. Now, the other thing is what happens if you don't hang around for the home run, which is what I did this morning here. Okay, so here's the Oracle Pro gap down. All right, we had this on the short list before the market opened. Beautiful pattern, 1, 2, 3. Really tight stop here. All right, saw this a little bit late, so I got a little bit of a late fill here. Same thing. Took half my position, was up about an hour and a half here. Ended up taking half the position. Took another quarter because we had a quick drop here. And instead of holding for the large trade, because this was the big target, which it exceeded, but $46 was the big target, right? $46 right here. Instead of holding for the big target, this is where my mind went. I didn't want to take a pullback on this. I didn't want this to move up because I didn't have a very secure stop, right? And I just didn't feel like taking a pullback, and I just wanted to lock in a winner, right? Now, even if I took a pullback and it stopped out, it would have still been a winning trade, right? But I didn't feel like living through a pullback, so I ended up killing it over the 1 minute bars high, all right? And guess what? You get exactly what you want out of the market, and that is I didn't live through a pullback, right? So I got exactly what I wanted. I didn't live through a pullback. But at the same time, I also captured 1/3 of the move here, right? Maybe even a little bit less, right? So I ended up missing this whole move, and I got right to the big target. All right, so this is the price that I paid today for not managing for the home run. All right, and so yeah, that's the price I paid. Was still a winning trade, but really missed out on the big move there. All right, so I hope this helps. It's a little bit longer than what I intended. Most of the videos are, so I'm working on trying to shorten them up a little bit. But yeah, I just wanted to come on, give 2 examples, and how my management style and how I try to let my profits run, and the reason why, right? Because it's those large winners which really accelerates your equity curve. Yes, the small winners add up. They absolutely do. But if you want to make a real big difference in your equity curve, it's the big winners that make the difference, right? And so through the 3 exits that I use, that's how I try to take advantage and put myself in a position to capture the big moves. All right? All right, guys, hope this is helpful. And yeah, as always, just stay in process. This was a learning experience for me today, but I'm just going to continue along in the journey and continue to learn. And I hope this helps everybody. And I'll talk to you guys soon. Thanks, guys.